This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, February 15th, 2016. Euro dollar. So the euro has come back under pressure over the past couple of sessions, but this doesn't really do a good job of taking the immediate pressure off the top side, while the market still holds above previous resistance at 110.60. There is still risk for a higher low now, and for this recovery to extend up towards the 114.10 area, which is a measured move objective following that break above that 110.60 high several days back, and a multi-day consolidation. At this point, only back below 110.60 would take the immediate pressure off the top side. Sterling dollar. So cable has done a good job consolidating off recent near 7-year lows at 140.80, with the market now holding above 143.50 and potentially looking for that next upside extension to allow for this correction to continue up towards the 148 area. Ultimately, the broader downtrend here remains intact, but again, there is risk for this correction to continue still towards the 148 area before the market looks to put in a lower top. At this point, only back below 143.50 would put the immediate pressure back on the downside. Dollar yen. So although we've seen a nice recovery in dollar yen out from those recent multi-month lows just under 111, overall, with the market breaking down below some support at 115, there is risk over the coming days and weeks for a more significant retracement back towards the 105 area. At this point, the broader uptrend does remain intact, but again, the market is possibly looking for the next major higher low ahead of a bullish continuation, and that higher low could still be lower down before the market looks to trade higher. Look for any rallies right now to be very well capped towards 116 in favor of the next downside extension. Euro Swiss. So Euro Swiss remains highly constructive despite recent pullbacks off fresh multi-month highs at 112. The market should be well supported into previous resistance now turned support around the 109.40 area in favor of the next upside extension back above those recent highs at 112 and towards 114 further up. Really only back below 109.40 would take the immediate pressure off the top side, though a break all the way down back below 107.15 would be required to negate the constructive outlook for Euro Swiss. Aussie dollar. So Aussie continues with its correction out from recent multi-year lows at 68.27, though ultimately with the broader downtrend here remains firmly intact, and any rally should continue to be very well capped towards the 73 area. Only a break back above 73.85 would compromise the downtrend in Aussie dollar. Dollar CAD. So dollar CAD is in the process of correcting off those near 13-year highs that were seen several days back at 146.90, and there is risk for additional correction in the sessions ahead for the market to retest a critical rising trendline support off of those lows that were seen all the way back in May of 2015. That could take us down into the 135 area before the market ultimately looks for a resumption of the broader uptrend, putting in a higher low and heading back towards and above 146.90. Kiwi dollar. So Kiwi has seen a bit of a correction in recent trade, with the market trading all the way back towards the 68 area, stalling ahead of 68. But again, any rallies here should be very well capped ahead of 69, with the market confined to a broader downtrend. Only back above 69 would compromise the bearish outlook for this market. Look for a break back below recent support, which comes in now around 65.63, to confirm or strengthen this outlook and accelerate declines back to more critical support at 63.47 further down. SPX 500. So although we're seeing a bit of a bounce out from recent multi-month lows at 1808 in the S&P 500, any rallies continue to be classified as corrective, with the market looking for a lower top ahead of the next major downside extension below 1808 and towards 1700 further down. At this point, there is some resistance that comes in around 1947, but a break back above 1993, some critical previous support now turn resistance would be required to take the immediate pressure off the downside in the S&P 500. Gold. So gold has seen some major breakouts in recent trade, with the markets showing a critical structural shift now to the bullish side following that break that we saw above 1192 the other week. At this point, the risk is for additional upside now back towards next key medium-term resistance at 1307, which represents highs that we saw back in 2015 from January. Any setback should therefore be very well supported into the 1160 to 1190 area, with only a break back below 1100 ultimately to compromise the newly adopted bullish outlook for the gold market.